Good evening, everyone. James Hicks here from Hicks New Media. Welcome to another fantastic episode of Perspectives in Focus. Tonight, I am joined by a very good friend of mine. Me and this guy actually worked together for a number of years back in the technology industry. Since then, he's now branched out and is focusing more on, I'm going to say, providing products and services for individuals and businesses to better protect their finances. I'll leave it at that, and I'll put that out there kind of to set the stage in terms of what we're going to talk about. Let me welcome everyone, Mr. Clark Menefee. Clark, how you doing today, brother?
I'm doing good, brother. How you doing, James?
I'm doing well, sir. I'm doing well. Is that probably the best way to sum up before we get into anything else?
Yeah, yeah,
Protecting folks and their finances.
yeah. Protecting their families, protecting their assets. So yeah, you summarized it nicely, man. I appreciate that.
Awesome. So now I tell you what. Let's give everyone kind of an elevator pitch. Who is Clark Menefee?
All right. Well, before I go into that, James, I want to thank you, man, for bringing me on the show. And as you mentioned at the opening, you and I go way back, not just
Yes,
to
sir.
when we work together, but we play together as well. We had
Yes,
many
sir.
years playing basketball together and football, and those of James, man, he's one of the coolest brothers I know. The first time
Let me go and let me send that PayPal to you right now. Even though I'm the one guy that was able to tackle you in football,
absolutely, you brought
I
me
do
down.
have that. I do have
Yeah,
that.
much respect for you. But I just remember, man, walking down the hallways of HP and, our paths crossed. And I was like, man, that's a sharp brother, confident. You had the clothes down. I was like, man, that's a good brother right there. I didn't even know you at that point until I got to Apple, man. But
Yeah.
3 years later, man, I'm proud of you, what you've been doing, being
Thank you, sir.
a father and a husband and taking care of your family. And, now you got your own business. So thanks
Thank
for
you,
that,
sir.
man.
Appreciate you.
Say thank you. Appreciate you for bringing me on.
Definitely.
And yeah, just a little bit about me. Uh, lived in Roseville now for 19 years. Man, time flies. And got my
Yeah.
start in the world of technology. And over the last year, pretty much, I've been wanting to branch out and do things on my own. And the pandemic actually helped speed things up. Being able to slow down, not being on the road all the time.
Mm.
Commuting, just trying to understand what I want to do. The second phase of my career and helping people. And so my main focus now is building up my own agency, CM Financial Group. It's under the umbrella of Symmetry Financial Group. And as I'm building up my business, my big focus is really helping, as James mentioned, helping families protect their families and their assets, and basically leave a legacy for their families. Too many times, um, this saddened me over the last couple of months. I've lost some people that I
Yeah.
went to school with, and when people pass away, it always saddened me when they put something on Facebook about GoFundMe, right?
Yeah.
Because they didn't have enough money to take care of their families or the funeral expense. So I'm like, how can I help people, with that?
Mm.
And also just to educate, people primarily, a lot of people of color, brown and black folk, like there's another way to protect your assets, as you go through life. So I basically help people with, life insurance, accidental and disability insurance, retirement. Work with a lot of tax-free vehicles. And the biggest thing is our flagship product. And my big focus is really helping people eliminate debt in 9 years or less on average, without spending any more, from their budget. Right. So
Yeah.
that's
So
the focus.
now you told me about that at one time before, and sounds fantastic, right? I mean, just the whole premise of being able to limit revolving debt
Yeah.
plus a mortgage in less than a decade,
Yeah.
and not really changing a whole lot of what you're already doing now,
Right.
right? So
Right.
before we get into that, though, I mean, because you touched on a couple of things that really strike me as well. I was thumbing through Facebook the other night, and unfortunately, I saw a lot of people that are friends
Yeah.
that are deceased.
Yes.
Right.
Yeah.
So I see a lot of that, and then just like you were thinking, but I was reminiscing on some of those folks, And I remember a number of those had to go through either GoFundMe or they weren't prepared. They hadn't had that uncomfortable or that awkward conversation ahead of time and prepared to get their estate, their lives, their finances in order, because you never know what's going to happen, right? Especially again with the way the world is right now. Talk to me a little bit about the conversations that you're probably having now with clients and potential clients as they come in. So let's not talk about the products just yet, but talk to me about a brand new potential customer or client coming in asking, how do I get started with the products that you provide?
Right. So, and it's an easy, conversation. What I ask them is, what would happen, God forbid, or something were to happen to you, what would happen to your family if they lost, your income, right? I'll ask that question. And that usually will, get into, oh yeah, I've got some coverage, through work, or, I've got something to protect my family. But more oftentimes than not, people don't think about that, right? I know I did, early on, especially before I got married and had kids. Just that we're not programmed to think about, those types of things, and how do you guard against, the inevitable. So it's just a really natural conversation, because I'm just trying to get them to understand that if your family is the most important thing to you, what are you doing to protect them, not only while you're here, but if something, God forbid, were to happen to you, are you sure that your family is going to be protected? Because, as I mentioned to you, too many times on, Facebook and social media, it took the family by surprise, and, they leave the family not only in mourning, but, in a lot of debt and a lot of stress, as well, right? So since I've been educated, in this industry, it's just, first thing I'm doing is reaching out to a lot of my friends and family, making sure that they're protected. But, I still get calls and referrals now. People like, hey, man, I thought about this. Thanks. I saw your page, see what you're doing. And they're actually calling me to tell me that, hey, I got this mortgage. I don't know how I'm going to pay it if something would happen to me. I got all this debt. I got all these bills. So it really just gets into a conversation of, what's the most important thing, and who are you looking to, protect and leave a legacy for?
Right. Now, I know there's different types of insurance products, right? There's whole term, things of that nature. But we can talk about that as well. But I'm really intrigued, and I think the audience is really going to have some more engagement with us if we start talking about, as you call it, your flagship product of being able to eliminate debt, reduce debt within that short period of time. So talk to us a little bit about that product that you have available.
Yeah. So, in life insurance, there's really, two kinds of policies. There's a term life policy. And a term life is just as the term, as that term, no pun intended, the term refers to. It's either 10 years, 15 years, 25 years, 20 years, but at some point in time, that term ends. So you're basically buying it for a period of time. And then at the end of that 30 years, you can either decide to convert it into a whole life policy, or, you can buy another, term life policy. But the term life policies are a little bit less expensive, because you don't have to, from an underwriting standpoint, you don't have to get fluids and, be completely healthy, to get it. A lot of folks prefer a whole life policy, because a whole life policy it's not just the death benefit that they are utilizing. They have, you can build up cash value and do a lot of other things while you're still living, and not just, benefit when you're not here. So that's the biggest difference between, those two policies, and it's really dependent upon the person's budget and really what they're trying to accomplish, long term. The wealthy, what I found out in my trainings and my certification is the wealthy and a lot of banks leverage whole life policies, because it does have cash value, and there's things that you can do within that policy to build up your cash value and use that to pay down debt and do other things while you're still living.
All right. Let me ask. So, are you seeing? And then these are just questions that are really coming up top of mind. Are you seeing folks maybe that they have their employer, they've got their 401k, or they've got those types of vehicles already set up?
Yeah.
Are you seeing a lot of folks maybe with the insurance already through their employer and saying, that's probably enough, right? The $100,000 or the the $50,000 that I've got, my long-term disability, whatever that I've got with my employer
Yeah.
is fine.
Yeah.
Why
Right.
do I need to
Sure.
get another product with you, Clark? Those kinds
Right.
of things. Just I'm kind of just asking some of those devil's
Right.
advocate kind of
Right.
questions.
And that's great. When people tell me that, I say, hey, I'm glad you have, some insurance. But two things about, the work, insurance. One, it may not be enough coverage,
Mm.
for some people. Some people get a $50,000 policy that in a lot of cases are free for the
Yeah.
employer. They
That's the
just
reason why they get it, because it's cheap or it's
cheaper.
free, right? So yeah.
Cheaper.
So I was actually leading you with that question because I was hoping you would say something like that.
Yeah,
That was a good softball at you.
yeah,
Yeah.
exactly. It's a little bit cheaper, but
Yeah.
to your point, this is the $50,000 policy, and they're like, "Hey, I'm good." But let's say they got a $400,000 mortgage,
Yeah.
and something would happen, who pays for that,
Yeah.
right? Who's going to help them pay that additional debt and all the other expenses? The second thing, James, this is the most important thing about those policies at work. It's not portable, which means you're paying into it. In some cases, it might be free, but when you leave that job, or if you get
Mm.
if you get let go, that policy's done. It doesn't follow you. You know what I mean? It's just like you leave that
Yeah.
job, the insurance ceases to exist. And the third thing, that I've heard from some people is it takes a lot longer for those companies to pay out. To kind of pay
Okay.
out the proceeds, right? In some cases, it could be a month, right? And if someone passes away, you need money
You need
right
that
away
money right
for
now. Yeah. Yeah.
burial expenses. So it does serve some purposes, but I think the biggest thing is it's not portable. And the second piece is it just may not provide enough coverage to help your family in case of, I think if nothing else, it will help at some point pay the burial expenses. But
Yeah.
what
Yeah.
about what about who's going to pay the mortgage next month? Who's going to pay the bills and all the credit cards and all the other things
Yeah.
that have come about?
Yeah, when you start getting to these types of conversations, don't cheat yourself and your family by trying to go the cheap route. Make sure that those that you leave behind are not burdened, right? So
Right,
don't just pay the Macy's bill because you
right,
got a $5,000 policy or whatever, but make sure that everything is taken care of
sure,
for time after. So.
right,
So appreciate that, because I was really wanting to have that discussion. And when you mentioned that it's not portable, I mean, I think
yeah,
that's something that some folks may assume, right? Because
yeah,
again, especially like so in the technology space, right? A
yeah,
lot of us are mobile either by choice or not by choice, right? It's
yeah,
just there's always movement, and if you leave one organization and end up going to another, if you had some insurance, you essentially have to start all over.
yeah.
Um, and a lot of folks don't really take that into consideration. So
Right.
appreciate you
Yeah.
talking about that.
Yeah. That is the biggest thing. It's just like when they leave, sometimes they don't even know. They said, "Oh, I got insurance to work that follows me, outside of
Yeah.
my place of employment." It doesn't. It's only the reason why it's a little cheaper is because it's under a group umbrella. So a lot of people in that company are paying into it. So it's portable. In some cases, the $50,000 policy is free. If you want a little bit more, you pay a little bit, $5-10 a month. But that's the big difference. And some of my clients that I've talked to, that's what they led with. Oh, I already have insurance. It's the
Yeah.
work. And
Yeah.
after asking me a bunch of questions and telling them what I just told you, they're like, "Well, that's not enough coverage."
That's not enough.
Right? And then a lot of them just there's a misconception too, James, that policies are just not affordable, right? It's like, oh, I can't get it, that's too expensive. Well, I'm a licensed broker that represents I contracted with 45 companies, so I can find coverage for just about anybody at an affordable rate that fits in within their budget. And a lot of folks are like, oh, I just didn't know. I just
Yeah.
assumed that I can afford it, so that's why I don't have coverage, right? And that's I was sad to hear that. It just tells me that there's just
Yeah.
a large percentage of people, and I count me included, prior to maybe 15, 20 years ago, um, where I was like, hey, man, I got to make sure that I'm leaving, and I'm not leaving my family in a bind.
Yeah.
That if something would have happened to me as the breadwinner, everything is taken care of, and we have that. People just have that comfort, like, okay, I think things will be okay. But that is the most uncomfortable conversation to have, right? It's just who wants to talk about that, right?
Right. Right.
right?
Nobody does, but it's one of those things you got to do. Those awkward, hard conversations.
Yeah,
Let me ask about numbers.
yeah,
Is there a number that is like you throw in an algorithm, you throw it in a formula, and you say you make X number of dollars per year. You've got this much in liabilities.
yeah,
You need Y amount of insurance.
yeah,
Is there kind of a de facto kind of
yeah.
format and formula that you utilize?
Yeah. I look at a couple of things. James. I look at your if they have a mortgage, is it 15, 30 year, how much do you still owe on
Mm-hmm.
it? The second piece I look at, what's that monthly payment on the mortgage. The other piece is, looking at, their income, because now you have all this income that you're currently using to pay, all of your bills and all of your debt. Well, what happens if, God forbid, again, something happens to you? That's what's left, for
Mm-hmm.
the family, right? So that's the conversation that I have with them as I get them thinking through, hey, I do have all this debt. I think I need this type of coverage. And, sometimes that coverage is not affordable. It's like, hey, that's too much. But it's like, all right, well, let's, figure out how you can at least help your family, you know, heal and get
Yeah.
back on their feet in a couple of years and just give themselves some time to recoup because, that's a traumatic thing as everyone knows, if something happens, that's just, last thing you're thinking about is how you're going to pay the bills.
True. True.
So,
The services that you provide. So talk to us a little bit about the organization that your agency falls under. So
yeah,
you've got the larger umbrella organization, and
yeah,
you have your agency. So
yeah,
talk to us a little bit about that, so people know.
yeah. So Symmetry Financial Group is, think of, State Farm or Farmers.
Mm-hmm.
Those companies are, those are like the flagship companies, and anyone who joins those companies becomes an independent agent, of that.
Mm-hmm.
They're basically using them as the de facto, that's your home base, so to speak. But we all operate, individually and building out our own agencies, just representing all the brokerage or all the insurance brokers, as I mentioned. And just basically, we're like the in between, the middleman between clients who don't know a lot about insurance and they have all these questions, and the brokers and knowing which ones to go to that can
Yeah.
help a particular client. So you get some clients that have pre-existing conditions, maybe they had a heart attack or diabetes or something like that. There's some carriers that won't cover, but
Right.
knowing where to go and something that's affordable, being part of Symmetry Financial allows us to have all of those contracts with the different carriers so that we can provide those services for our clients.
Okay. Okay. I got two questions that literally just popped into my head, and one is because I'm my extended family is going through some of this right now. Do you provide residential insurance? So for fire,
No,
does your organization provide something like that as well?
no, that's a different. There's other
Okay.
organizations that take that separate. I'm just life and health.
Okay.
Basically
Okay.
things, and it's basically covering. I can do you know uh, people who own small businesses. I can
Okay.
help them, and I can help individuals, right? And
Okay.
helping make sure that if you're a small business owner, making sure you have policies that can protect your business and also
Yeah.
generate some cash flow for you as well.
Okay. Okay. So that's good to know that you can go into the businesses as well, and work with the business and all of their individual employees.
Yeah.
Are you limited by state? Are you
No,
across all 50 states, or are
no,
you
no.
just
That's the
just
great.
California?
Yeah, and that's the great thing, James, with the pandemic. It used to be just local, right?
Yeah.
It's
Yeah.
what I found is that I can get licensed right now. I'm licensed in six other states.
Okay.
Uh, I can help people through technology, similar to what we're doing here.
Hmm.
I can just call them up, we'll have a conversation. We'll do a Zoom or some other type of web-based virtual conference, and just having the same conversation you and I are having now. So it's allowed me to be in my home office,
Yeah.
in some cases, and still be able to help people. Um,
Awesome.
and for me, it's just I'm still very very nervous to get out there and expose myself. So some clients still want me to come out, to the house and sit down at the dinner
Yeah.
table. I
Yeah.
wear a mask to do that, but I would say 75% of the folks that I'm helping now is just virtual conversations.
Okay. Okay. Awesome. And that's really refreshing to hear that you were able to expand your borders as well,
Mm-hmm.
right? Because I was really specifically curious as if you were just like Nevada and Colorado and California, just West Coast, but you can
Yeah.
actually branch out and provide your services across the U.S.
Yeah.
All right, now let's talk about that big one you got there. Let's talk about the debt-free life.
Yeah.
I want to know about this myself. So I'm curious because I would love to get rid of this mortgage before both kids finish college. So talk to us a little
Right.
bit
Right.
about
Right.
this
So,
product.
the key points, though, and this is how the conversation usually starts, James. It's, the question is, are you 100% sure, that you're going to have great retirement, or do you have some doubt? It's kind of the
Mm.
first question. A lot of people are like, oh, I don't know, man. Before I had no doubt, but now I have doubt. And the second piece is, what if I could show you how to get out of debt in 9 years or less, including your mortgage, without spending any additional money, than you're spending right now? Would that be something you'd be interested in? 9 times out of 10, yes. Tell me more. And really, the why, and this is, I'm going to give you some data points, James, and this just blew my mind because I kind of knew, but I didn't know the extent. 63%, of Americans are carrying debt, into retirement, right?
Hmm.
And you look at the average of the typical American budget. When you look at that, holistically, and you break it down, and between savings, lifestyle, how much interest you're paying, and how much taxes you're paying as well. Did you know that 74% of the average American's dollar is going out into two buckets: taxes and interest? Right? Very little for, that leaves very little for savings, and
Okay.
very
Yeah.
little for your lifestyle. That's only 26%. What we're, saying is we can kind of put more into your savings, and we can grow that from 3% to 15%, and we can put more in your lifestyle and reduce, the amount of interest you're paying and the taxes you're paying. So that's the biggest piece is, for me, when I heard that, it's like debt is really dry, it really drags, people down. So like, what are some of the other ways that you can get out of debt, now? Because that interest that you're paying, James, think about it. If you're paying, 6% interest,
Yeah.
or in this case, you have a mortgage, it's 2.5%.
Yeah.
It's
Right.
19% on a credit card. Whatever you're not paying, that's at 19%, 2%, 6%. That's going back to you, right?
Yeah.
You're eliminating, that debt.
Yeah.
And really, without getting into all of the particulars, the way that the whole life policy works is all the money that you're putting into that policy is it's actually, gaining interest for you that's compounded, annually, that you can use, to,
Okay.
pay off your debt,
Yeah.
right? You just kind of take loans against, the policy, and
Okay.
that, reduce the money, reduce your debt. It's called a snowball effect, right? So this allows you, and in full disclosure, and I can share this with you, without giving the client's name. I was talking to one client who owed, $700,000, right? With his,
Hmm.
including his mortgage, and it would have taken him 29 years, to get out of debt, right? And this cat is, he's 48 years old.
Yeah.
Right? Do the math. And I did a free illustration for him, ran the numbers, and showed him how to get out of debt in 9 years, including his mortgage. Right?
Wow.
Now, I can't get
Yeah.
into all the secret sauce, but if you're interested in seeing a free illustration, I can run one for you and go over, in more detail, how it works. It's just a lot of, graphs and things like that. But the key takeaway, you'll be able to see, how all of that debt is taken care of one by one, and then it also shows, in a certain amount of time, you're building cash value that you can, use to borrow against, you can use to, take out and live everyday expenses. The biggest piece that I found is banks leverage this type of policy.
Okay.
Wealthy people leverage this kind of policy because the biggest thing is it's a way that you can reduce, reduce your taxes and save interest and basically turn yourself into your own bank. Right?
Interesting. I
That's the
like. Okay. Okay.
like, well, I don't have to go to the bank if I have to do, a home remodel. I can just borrow against the policy, and I'm paying myself back. I'm paying myself back in interest.
So that just sparks a whole bunch of questions in my head, and
Yeah.
and just wondering are there penalties for doing something like this? Are there penalties for taking out loans against myself?
Right.
For one
No,
is one question.
no.
I mean, can I do it as many times as I've got? I'm assuming it's based on the equity either in the assets or the equity
Yeah.
that's stored
Yeah,
in
you're
the
building
insurance
up,
policy.
there's a line item, within this, policy. It's called cash value, right? So you're building
Okay.
up your cash value. And to answer your first question, is there a penalty for doing that? No, there's no penalty, right? You're basically borrowing money from the insurance company. And the reason why they'll write you that check, because they're going to look at your cash value statement and say, hey, James has
Okay.
you know,
Okay.
$50,000 in his policy. He just wants to take out 10 to do a home remodel. Boom, they just transfer that account, transfer that back into your account. And as you're helping, pay that back, with your own premium, because you're going to have to pay a premium anyway anytime you buy insurance. Part of that is going towards, paying off, the loan that you just took out against, the policy. And here's the crazy thing, James, is if you decide not to pay back, the loan, there's no
Uh-oh.
penalty, because what they do is, they just basically, if you have I'm just using this as an example. If you got a $500,000 insurance policy, but you take out, $30,000 that you didn't pay, but if something would have happened to you, now your policy is 470,000.
Mm-hmm.
You know what I mean? So yeah, so that's one way that
Okay.
But again, most people are like, no, I just want to continue to build cash value. So
Right.
put it in
Right.
the policy, anyway.
And most people are going to pay it back anyway, right?
Right.
We're the world is crumbling around us, but there's still a handful of folks that are relatively decent. So I think
Yeah.
most of us will still want to pay that loan back.
Right.
Uh, how does it work in terms of are there I don't know if points is the right word, but does it cost more to borrow this money from yourself
No. No.
or okay?
No, yeah, there's no. It's not like the traditional bank. There's
Yeah.
no paperwork you need to sign. There's no penalties or anything like that. It's just as you continue, because you're still paying your premium, right? As you're taking money out, you're not paying any more than just your premium, and part of your premium is going towards. Remember, it's going into different buckets, so you're actually having your money, work twice for you, right? When you're putting
Yeah.
that, paying that premium, part of it is going towards, the life insurance policy. The other part is going towards, helping you build up your cash value. So
Okay.
that you can use that to either pay down debt or just, again, continue to build up your cash value.
Okay. And as you take these withdrawals, these loans, take advantage of this type of service, it doesn't limit the overall policy that you have, right?
No,
Again, so you've got $1 million policy. You decide to do a loan for $50,000.
right.
As long as you're still making the payments on your
Yeah, as long
on
as
your
you're still
policy, all
yeah,
right.
as long as you're still, because you're making that premium payment anyway. But all
Yeah.
you're doing, James, is, today, and this is the most important point that I wanted to point out, is like, without this policy, your job, your money, you're only giving your money one job, right? You spend that money on your debt, paying off your house, that money's gone,
Right.
right? It's gone.
Yeah.
Uh, you know, with this, with this program, you're giving your money two jobs. One, you're earning interest for the life of the policy, a guaranteed 4% compounded annually every single year.
Okay.
That's the average, right? Sometimes it's, right now it's 6%, but on average it never goes below 4%. And you're paying off debt while you're earning interest, right? So you're giving your money two jobs versus without the policy, you're just giving it one job and you're paying off debt, and that debt, the banks are benefiting from you. The loan companies, everyone's benefiting from you. But you're not benefiting, right? This is why a lot of, folks like, Walt Disney, Warren Buffett, the Rockefellers. I mean, there's a lot of, wealthy people that leverage this type of policy for the reason I just, stated for you. It's like, I'm trying to reduce my taxes.
Yeah.
I'm going to, save interest, right? So I can put everything in this policy and be able to borrow, against it if I need it, especially for a small business owner, right? The most important thing for a small business owner is cash flow. How do you reduce, your debt and increase your cash flow so you can buy more equipment, hire more people? It just gives you a little bit more flexibility, to help build up your cash value.
I love it. I love it. Yeah, this definitely does sound like one of those programs that you got to have a secret handshake to know about, but you really don't, right? Because
No.
it's out there. So let me ask:
Yeah.
is this debt-free life, as I'm looking at the the flyer from your organization, but is this something that all insurance companies provide, or is it unique to Symmetry?
No, it's
Because
unique.
you hear different angles of something like this, but yours is very concise and very accurate in terms of what the value proposition is. But
Yeah.
I haven't heard of that this way before.
Yeah. There's really, I mean, there's three carriers that that I know that carry this type of product.
Mhm.
The rest of them, they have different types of whole life policies, James, where a lot of people are interested in, I'm putting all these premiums in, how do I get some money out in 10, 20 years? You have those traditional whole life policies.
Right.
This one here is specific to just three, carriers that offer, a
Okay.
way to basically turn yourself into your own bank. And the most important thing is, to your point, I thought like you did. I was like, what, you got to be part of a secret society?
No,
Um,
I got to be a fraternity. I got to know the secret handshake to get into the door.
yeah,
What?
and when I
Yeah.
was sitting in that certification training for a couple of days, I was like, I couldn't wait to get out and just tell as many people as I can, because today, a lot of wealthy people know about this type of policy.
I'm sure.
This is what they're handing down to their kids and their families.
Yeah.
I wish somebody had told this to me when I was 24, 25 years old. Man, I'd be a lot farther along, right, in terms of
Yeah.
paying off debt, not having to pay as much interest. And the biggest thing is, you get a 30-year mortgage, and you can pay that mortgage off in basically, 9 years, and you free up that, $1,000 to $1,500 or $2,000 a month that you're paying in mortgage.
Yeah.
Yeah, that's a life changer for a lot of people, right? Because
That's
that's
huge. That's
people,
huge. That's real money. Yeah. That's
yeah,
real
that's
money.
real money, and the real debt. To be honest with you, is really not. When you borrow $350,000 or $400,000 for your house, and you're thinking, oh,
Yeah.
that's my debt. No, think about all the interest you're paying. By the time you're paying that off
Yeah.
in 30 years, that
Yeah.
$400,000 house is going to cost you like $600,000.
Yeah.
So that's basically $400,000 of interest that you're paying to somebody else. How do you flip that around and say, hey, I want that to come back to the Bank of James?
I want to keep that in my pocket, right? Because I'm completely in that ballpark, and I hate paying interest on revolving debt, which is why
Yeah.
I have very low revolving debt, because I can't stand paying Chase and Citibank or
Yep.
whomever 14 to 20% whatever interest. So you've definitely got me sold in terms of that whole proposition there.
Right.
And again, I keep looking for what those why questions, right? Some of those hard
Yeah.
questions. That's someone who I see the metrics here. I see a ton of folks watching it on different channels right now, but no one's asking the questions. But how do I get involved in something like this? Who provides something like this service? How much does it cost up front? I mean, are
Yeah.
there entry fees or costs or something to get one of these programs, or is it just again just going in, having an appraiser coming? I'm sorry, I'm thinking of home. But I got too many insurances going in my head right now, right? What I mean, do I have to go do the medical or whatever the case may be to sign up for this type of a service?
No. I mean, the easiest thing that you can do, and that, to your point, is that people just don't know how to get involved. And the biggest thing is just, reach out to me. I'd be more than happy to have a, conversation with you. It's no obligation. If you just want the information, I can run a free analysis, and if nothing else, you can walk away and see how the program would work, for your debt.
Yeah.
And I've done that plenty of times. Just an educational thing. And most people are like, hey, Clark, I'm interested, but I just want to know what's all involved. And, I'll have that conversation with them. I'll, they'll walk me through how much debt they have, how much interest they have. And, I have this software illustration where I just kind of plug it in, and boom, out comes a nice little packet that tells you, here's the road to how you get out of debt. Here's how we're going to do it. And then all the questions will come from that document. And then that's when we start talking about, to answer all the other questions that a person might have. But
Okay.
in order to get started up, it's no obligation. It's just a matter of, reach
Just
out.
that conversation. Okay.
Yeah, I'll be more than happy to provide, the information to you, and, no obligation to purchase anything, just a way to kind of look at what it's going to, what the interest is costing you, and how, the program that's going to show you how to get out of that, and you can figure out if that's something you want to move forward with or not. Pretty straightforward. But most people, when they see it, and they ask themselves, what would a life of no debt look like? You know what I mean? It's like
Couldn't fathom that yet.
right.
Yeah.
So you know what your income is, and some people are just, they're working so hard, they make good income, but they're actually making as much debt as they have, coming in, right? So they just can't seem to get out and put money in a 401k, put money in savings, and they basically are just living life, James, day by day. And
just existing.
Exactly. And before you know it, 30 years passes by, and you're still working. And you're still working hard. And, for me, I just want to be able to get out of debt so I have more options, right? Because when you don't have debt, maybe you don't need to, have a job where you're stressed out and making all this money. It's like, hey, I don't have a lot of debt, so I have more choices with what I want to do in my life. If I want to go be a teacher, if I want to go do this, it's like life just opens up to you when you don't have, debt kind of, hunkering you down. Whether it be student loans, as you're about to get into with your children.
Why you gotta stir up some bad news there? Shouts out UCLA. You want some of this money?
Right. As my daughter went to an Ivy League school. That's
yes, sir. Yes, sir.
So just trying to figure out, like, I don't want to have to pay debt for the next 15, 20, 30 years. I want to be able to be done with that and just give myself more options, just a better quality of life. And I just want people to know that there's a better way, to do that and to protect your family, but also to help build a legacy and, while you're living. And, by the way,
I like that.
There's a death benefit as well, but there's things that you can do with the policy that can help you while you're living.
Yeah. I like that mentality that you have there. And again, you think about it, some of the hardest conversations that folks have or don't have is about finances, right? Because that's what brings up a lot of stress in a lot of relationships and a lot of households or whatever, worrying about that next dollar. If you're just living paycheck to paycheck, if you don't have enough saved for things you want to do some traveling, you want to go, you want to buy that new car, but you can't because you got to keep working. You got to work 2, 3, 4, however many jobs. But having these types of conversations early, the fact that you offer the services, as you see, I've got your website and your phone number here down below. People can contact you and have these conversations and start having a plan. Because a lot of times you think about it, folks don't have a plan. If you got a plan, then you can be successful and you can relieve that stress and live a much more fulfilled life and enjoy this journey, right? Instead of worrying about that next meal.
That's interesting you said that. You actually stole one of my taglines about, that's the question I have. Do you have a current plan to get there, right? Because people, I think everybody obviously wants to get out of debt, right? They want to get out of debt as quickly as they can. But if I ask them that question, do you have a plan to get there? And it's the hope strategy. Well, I hope to one day have a stronger plan, to help get out of debt. But, people don't, and I get it because I was one of those individuals. You don't think about it because if you think about it, it's just going to depress you, right? So you're literally just living, okay, at some point in time, I'm going to get some extra money that's going to come in and I can apply it towards, extra payment on this credit card or payment on this mortgage. But, remember what I said earlier in the conversation, you're only giving your dollar one job at that point, right? And that's to basically help pay that interest or pay down that debt for someone else. Why not, bring that back to you and help, you snowball in paying off your own debt and getting out of debt a lot sooner, right? So, some people have a good plan. They're like, hey, I'm going to double up. I'm going to use some stocks or things like that. Or, I have some stock options. Okay, that's one way. But guess what? You're going to be taxed, right? When you take out stock. And remember
yes, you are. Speaking from experience, I'm just gonna say.
I've been there too. The biggest thing about it is just like the money that you're making, it's not taxed. When you're taking money out, putting it back in. I mean, none of that's taxed. It's like you're helping pay down debt, and basically you're building cash value for yourself that you can use for, finance future purchases and then start the process again. Right? It's just basically having a tool that's going to help you get out of debt, whether you have a 5-year car loan that you want to reduce to a year and a half, whether you have a mortgage that's a 30-year mortgage that you want to reduce to, 9 to 10 years. right? It's just giving people, more tools of which to help reduce your taxes, reduce the interest, and give that back to you, right? So you can put more into savings, so you can do more with, with that money, right? And just live a, fulfilling life, right? Because, today there's just, like I said, there's a lot of Americans that are just living, they're not living that debt-free life, and it's
Yeah,
a
yeah.
stressful thing for them.
And on that note, I mean, I think that is a great way to sum this up. I mean, living a more satisfied life, but more importantly, having a plan to get to that point. It's never too late.
Right.
So never think that it's too late. Uh, Clark, I've got your website up here. I've got your phone number. Anything else that you want to tell the folks before we wrap for the evening?
No, no. Just again, think about your own situation. Think about your own families, and again, just continue to just if I leave you with nothing else, just think about this. Long hard. Close your eyes and think about the debt that you have today. What if you didn't have that debt? And the money
Yeah.
that you had coming in is just money that you can use to go on vacations, maybe buy some investment property. Just it's a different life, to live, and it can be lived, right? There's a way out, and again, if you want to know more, I'd be more than happy to, provide a free illustration for you, and go into even more detail if you have questions. But debt-free life is out there, man. It's out there for all of us, and there's a lot of people that I've helped live that life, today. And again, if you want to be one of those, just reach out to me at my phone number, and I'll be more than happy to continue this conversation with anyone individually.
Awesome. Appreciate you, man, very much for that. That is some good information, and it's like the old was that ESPN show, Numbers Don't Lie, man. Okay, so you get those numbers, and you get those spreadsheets, and you can't dispute it. So
No, it's all right there, right? And
yeah,
that's the great thing. It was eye opener for me when I did the program for myself and my wife, and we're just thrilled that we felt that we have a plan, and we have
yeah,
a plan to not go into our retirement years in debt.
yeah.
Right?
I love it, man. Who knows? You may get another call from me as well, just to re-look over my documentation to make
So,
sure
be
make
sure,
sure
right? Be sure.
just make sure that we tight, right? Make very crisp.
Yeah.
Clark, I appreciate you, brother. Thank you very much for taking the time for telling your story, telling about the products and services that you have to offer. Again, these are the hard conversations that you have to have, and do it with someone you trust. Folks, I trust this guy. I think you will too. You've got his number. You've got his uh, website. Give him a call. Clark Menefee. I appreciate you now.
Hey, thanks a lot, James. I appreciate you, man. Hope to see you soon.
Thank you, sir.
Hey, take care.